What's going on, ladies and gentlemen? Welcome back to the channel. So in today's video, we're going to do a quick update on the SPY and the Qs. We're going to touch base on a couple of wave counts. One suggesting that the upside is still at play. I'm not favoring that count too much at this point. And I'll tell you guys why when we review it. I am favoring further downside at the moment. So before we dive into the analysis, don't forget to subscribe to the channel, give me a thumbs up on this video, and hit that bell icon so you'll be notified when I upload the video. So leave a comment down below, guys, if just letting me know what you guys think about the markets currently, where you guys think the markets are heading, what levels you guys are watching, so we can interact and exchange ideas and see where our analysis align or learn from each other. So I have the SPY daily time frame up in the screen at the moment, and there's a reason why. Okay, so we have our traditional moving averages, right? We have the 50-day moving average, the 100-day period moving average, and the 200-day period moving average. Okay, so most notably, I want you guys to pay attention to this red line. And that is, we haven't really retested that line since June of 2020. We have been ever since just trending upwards, holding the 100 and the 50-day period moving average as our levels of support. Now, we are back here at the 100-day period moving average, and we closed above it today. So the question is, are we going to retest that 200-day period moving average, or are we going to hold the 100-day and move on higher? Now, I'm going to turn on our labels here and in the daily time frame, and I'm going to say that we may be heading on lower and retest that 200-day period moving average. Where is that? That is somewhere, as the price goes down, obviously the moving average will ever so slightly curve lower. So we'll see within the smaller structure where that will land. But for now, we are looking for price action to reach down towards the 23.6% retracement at the very least, which yields a 433 spot or $3 region for the SPY. Now, that comes in confluence with the previous wave 4 pivot point here on October the 4th, which is an appropriate zone of of pullback for a wave 4. Okay. Now, zooming down towards let's take a look the 1 hour time frame. We're going to dissect price action from October to today, January the 19th, and we're going to review the wave counts there. So on the 1 hour time frame from October to the lows, right, we have 5 waves up. Then we have our 3-wave pullback, right, to wave A, 3-wave pullback to the wave B, and now we are here. Now, I've reviewed this with you guys previously, but I keep on getting these questions, right? Are we at the top already? Are we now heading on lower? So I'm not entirely convinced that we've reached a top in the market and the cycle is complete. Only because, if this was a wave 5 of the primary degree, then we would have seen a massive pullback, right? Greater than this sideways consolidation. I mean, we keep on making higher lows, not indicative of a triangle, I don't think so. But what I'm trying to say is that if this was a pivot point of a completed wave 5 of the primary degree, then the reaction would have been further down, all right, more aggressive. However, another question was that what if this was not the wave 3, but the wave 5 here, on January the 4th, what if this was the high and we got a truncated 5th of the primary degree? Now, I still don't favor that count because a truncation still indicates that we have 5-wave progression. Now, this is not 5 waves. We see 1, 2, and 3 only. So, for those reasons, I don't favor that count as being all she wrote on the wave 5. However, what I am favoring here is that out of this October the 4th low, we got our first wave 1, pull back into the wave 2, 3, 4, 5 to complete a cycle of the primary degree wave 3. We're now intermediate wave A, ABC into intermediate wave B at the 1272 external retracement, okay, of this wave A, and now we're making our waves down towards the wave C of wave 4. Now, let's dissect the zone here, and to do that, we're going to take you down to the 15-minute time frame. So I'm going to reset scale, and I'm going to focus your attention here. Okay, we're going to focus your attention here from January the 4th to January the 18th. So from January the 4th, we have our first wave 1. okay, in the minor degree. We then get a wave pullback into the wave 2, which came into an appropriate 618 to 78.6 retracement, okay, and that's an appropriate pullback for a wave 2. It's a little too deep to to say the least, but it is appropriate in any case. Now, once we saw a reversal, we're now considering this to be the wave 1 of wave 3. Okay, so wave 1 of wave 3, wave 2 of wave 3, which we'll be tracking. But here's the thing, guys. Okay, so from this low, okay, and our bullish count is suggesting that this was the start of the wave 1, the wave 2 pullback. Actually, sorry, the start of the wave 1 here. This was ABC into the wave 2 pullback, which I'll show you in just a minute. However, that may not be the case anymore because our first trigger point was again triggered once we broke the low here on January the 10th when we broke it today. Now, the game plan coming into this week is that if we start seeing, if this is the low, right, if on the overnight session, the futures market, we see markets consolidate and start reversing, okay, I want to see price action come up towards the 38.2 to the 50% retracement, which will be the 464, 462. At which point, if we see this price action unfold in 3 waves, okay, I would like to take a short opportunity to the downside around this zone, okay? At that point, we would like to see if price action will take us down towards the $443, $445 region in the SPY of the wave 3. Okay, however, if that's not the case, if the case is that we continue on higher, then we look for the 618 and so on, okay? Obviously, invalidation will be if price action continues on higher from beyond the wave 2. So you have your game plan as follows, okay? Say we continue on higher or we hold this low here, 3-wave pullback into the 38.2 to the 50% retracement is a good buyable opportunity to the downside. All right, guys. So taking you over to the bullish count in the SPY. Our bullish count in the SPY here suggests that. Let me adjust scale. Take it down to the 15 minute time frame. Okay. Here is suggesting that we see potentially that 1 hour time frame. It's easier to read. That from our December the 20th low, okay, we got our first wave 1. Okay, ABC pullback into wave 2, and then we go. Now, the reason why I'm no longer favoring this count is because of the following. Okay, should this be the wave? Let me just label this right. This was A up in B, down in C. Okay, equality of wave A and versus B comes at 449. And what is wrong with this, guys? What's wrong with this is that will mean that wave 2 will go beyond the territory of wave 1. Okay, and that is an invalidation in the world of Elliott. So that is not the case. Okay, that can't happen. If that's the case, then obviously the chart at play is our bearish count, which will suggest for the downside. So we're gonna wait for this trigger, for this secondary trigger, the 451.23 to hit. Maybe it hits overnight. Maybe it hits. Maybe we get that pullback into these levels, like suggesting here. Okay, out of this wave 1 into the wave 2 at 464, 462. Okay, and then we roll over. So we're gonna keep that on watch. However, you may be saying, okay, but the 618 is also a valid retracement of the wave A, okay, versus wave B, and it is true. Okay, which is why we're still holding this count as our alternate. Okay, so should 457, 458 break and not hold, again, then this is our likely scenario. At which point we're going to wait for a 3-wave pullback to then take opportunities to the downside. Okay, guys, so prepare yourselves for that because the opportunity to trade is in the horizon. However, a lot of you are may be thinking, well, this is pretty bad. Why are we gonna heading on lower? Is gonna be a bad opportunity. It really isn't. If you think about it from a larger perspective, we're just in the wave 4. All right, guys, we're just in the wave 4, and what's next is the wave 5. So we're still going to see continuation to the upside in this market. So just be a little bit more patient. Wait for this pullback to unfold. You may be sitting on your hands. It's okay. You don't have to trade any of this. You just got to wait for confirmation for price actions to start showing some sort of divergence in the higher time frames, and then take it from there. Let's take a quick look at the Qs. Okay, in the Qs, we are we are suggesting the same thing, right? We are looking at a W, X, and Y. So out of the X wave completion here on December the 27th, we have our first A wave, our B wave. Let me take you down to the 1 hour. All right, so A, B, which the B came in towards the 68 to 78.6 retracement, okay? So wave B completed, and then we have 1, 2 in the makings of the wave 3, 4, and then the final 5. So this one should be able to complete relatively sooner than the SPY. Okay, maybe our targets here are going to be somewhere between the $366 region and the 343.26. Okay, guys, so keep this zone of this range on watch for a potential buy opportunity for the wait for completion. Okay, guys. Let's take a quick look at bonds and yields. Taking you over to TLT. TLT is suggesting that we may be still seeing for the downside, which will confirm continuation to the downside on the Qs, because that will mean that yields are going to start heading on higher. So if yields start heading on higher, let me take you over to this count here. Daily time frame. Okay, so 1, 2, 3, 4 consolidation to 23.6% retracement, and now we're hitting pre-COVID highs. So that's pretty notable, guys. All right, if we start breaking out of this zone and into the 2.88% and 10-year yield, then that's pretty bad for the market at the moment. Until they start pricing in and balancing it out, we will start seeing continuation to the downside as suggested from our wave counts out of TLT. Let me adjust scale here. As we see yields go up, we start seeing this go down to complete its wave 4, and TLT also, guys. Okay, so TLT will likely see its wave B pull back once wave 5, wherever this lands, completes. Okay, guys, so that's it for me tonight. I hope you guys are well. Good luck. Let me know if you guys have any questions. Love to interact with you. Again, subscribe to the channel, give me a thumbs up, and don't forget to hit that bell icon. So I'll see you guys tomorrow. Take care.